Welcome back, traders. This is the Options Trader Lounge, and in today's video we're going to be discussing my trading plan for 2024. Now, we have seen incredible returns for both the S&P 500 and the triple Qs, with the S&P 500 producing a record return of 23% in a year and the triple Qs cranking out a record raging return of over 50%. Now, the question is 2024 going to be any different? And how will we, as an option trader, uh, attack this market in this upcoming year for 2024? As we know, 2024 is an election year before we put in a new president for the United States, which is the market that we trade in, which is the US equities market. We expect to see a lot of turbulence as favors swing from one party to the other and policies get booted into this the following year for 2025. So 2024 is going to be an incredible year. We expect a lot of volatility to be coming in, and the question is, how will we be trading this upcoming year? So in today's video, we'll be discussing this, and we will be discussing my trading plan, so that way we can have a better idea of what to expect and what things we need to put in place ahead of this year, this trading year, so that way we could have the best returns. So in today's video, we will be discussing that. So without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you, so give yourself a drink, sit back and relax, because we have a lot to talk about. Now, we know that this market has generally been an up market from the beginning of 2024, or I'm sorry, from the beginning of 2023 to date, right? This has been for the S&P 500. There's been dips along the way, but generally it's been a straight shot up, despite all of the headlines saying that we were expecting a recession this year. Now, the question is, are we going to be getting a recession in 2024, right? The question is unknown and nobody can really predict this. The only thing that we can stick to is our trading plan. And in today's video, I'm going to be outlining my rules and the things that I will be looking for in 2024. So my trading plan for 2024 is going to be very simple. The simpler you can make a trading plan, the better you can stick to it and execute when your execution is needed, right? The idea is to follow signals that you see set up in the market and to take them despite your feelings, because ultimately we don't know what happens at the end of it. At the end of your execution, it's either you win it or you lose on it, right? You take your stop losses or you take your take profit. And so that is what I will be doing and how I'll be framing my trading plan for 2024. But before we do that, what I want to talk about is, and what I want to instill in this whole video is the idea that we need to have the right mindset, the right framework in mind before we discuss, particular concepts. Now, this is a quote from Warren Buffett, and I think this is 100% accurate in terms of the mindset that we need to take as traders. He goes on to say that you will be right over a course of many transactions if your hypothesis is correct, your facts are correct, and your reasoning is correct. This is the simplest way to outline a framework of how you should approach trading. Because when it comes to trading, you're trading off of probabilities and statistics on a particular setup, whether or not it's going to produce a positive return or a negative return, right? There's a probability on every trading setup, and the idea is not to get so fixated on this, But to understand that this is a true thing, everything has a probability. Even when you look at a coin flip, heads or tails, it's a 50-50 odd that it's going to go heads or it's going to go tails. And so when we build this framework for trading, we need to have a hypothesis. We also need to have facts to support those hypotheses and our reasoning whether or not we should enter long or enter short. The way we arrive to the outcome is over many transactions. And so this is the framework that we have to focus on and really understand this as traders. Now let's go on further to my first bullet point. Number one, we need to focus on one trading system to realize the system's probability over a course of time. Now, when it comes to trading, trading is a long-term thing. It's not all about hitting the jackpot, winning it big on one trade. There are no, like any professional trader knows this, that you do not win a career making millions on one trade. Rather, you make a career over a course of time over multiple trades because any professional trader has a system in place from the beginning, and they should know that the outcome of every single trade that they take is completely unknown. All you have is your execution, whether or not your trading setup is telling you to go long or telling you to go short. Now, secondly, uh, I think it's important to understand that there are things in the market that will swing a trade left or right, up or down, right? Uh, Not necessarily left or right because you can't work in the past, but more up or down, depending on the price swings of a particular instrument. And one of those big events are what we call binary events. These binary events are things that are going to swing the market based off of a particular headline. And for example, we're going to use the Fed rate decision, which was the biggest swing factor that every trader was focusing on in 2023. And I believe it's going to be the same thing that we will be looking towards in 2024, along with many other binary events such as the unemployment rate, which is now going to be in focus at what I think, because uh, usually, usually whenever the Fed starts cutting after a rate hike, it's usually because they're seeing cracks in the marketplace where things are starting to fall apart, and so the Fed will cut rates so that way it could re-energize spending and businesses to start borrowing on lower interest rates so that way they could continue to invest. And so that is what I'm going to be focusing on. And the reason why I will avoid binary events is because there are 252 trading days in 2024. There's 9 Fed rate decisions in 2024. If you just step aside and not trade those 9 days, that leaves you with 243 trading days in 2024. Any trader could just avoid 9 trading days of opportunity, you know? And plus, whenever we are in a binary event, it's usually algo driven. So the markets will usually take out many stop losses and go beyond standard deviations in terms of price range, and it could just literally obliterate your account, and it's just not necessary. You could just avoid these trading events and just continue on with the trading system without those trading events. So that is one thing that I'm going to be working towards, and it's a part of my trading system that I will be implementing. Now, thirdly, I'm going to be utilizing stop losses. Stop losses are something that I've implemented in 2023 and in my prior trading uh, systems. But I think this is something that, as us traders, we should not ignore. Stop losses are necessary. It's a necessary part of a trading system because it allows you to free up your capital on a losing trade so that way you could take advantage of the next opportunity. And if you look at a casino, casinos understand that losses are inevitable. Um, any casino on their balance sheet will set aside a budget that losses are expected. You know, they have to pay out their players. Otherwise, nobody's going to come to the casino and gamble. And this is something that I've learned to not front over because losses are a part of any trading system. And it's going to be just ironic to and bizarre to even fathom to think that whenever casino board members are sitting around the table and they see $1 million in losses, you know, that's really nothing to the amount of revenue that they're bringing in uh, day after day as more people start to gamble their money away. The thing that allows them to stay confident in what they do as a casino operating business is that they have an edge and they understand that their system as a casino operator has an edge over the gambler that comes in and gambles their money away. And that is what the regular casino gambler don't understand. That the casino has an edge over you no matter what game you play. And the way they stay confident in this is by making gamblers play small bets. And this is another thing that I am utilizing in my trading system is that allowing myself and to be able to have multiple trading bets is what is gonna keep me afloat because if you just gamble away your entire account on one trade, you may win a few, but that one loss will totally wipe you out and it'll make you uh, not profitable. You know, um, if you haven't seen what a trading loss break even chart looks like, this is what it looks like here. And you can see here that if you take a 5% loss to return back to break even, it takes you a 5.26% return just to break even. The bigger the loss goes, the harder it is to return back to break even. As you can see here, if you take a 50% loss, you know, you're gonna have to make up from your new account capital with that loss. You're gonna have to return a 100% return just to break even. And so that is not a good trading strategy. And the better way to do it is really to keep your account size small and have multiple trading opportunities. So that way, you know, when you take your stop losses, it takes you out of that trade. It allows you to reset your mindset for the next opportunity that comes around. And again, this goes on to monitoring my position size on each trade to be no more than 5% of the account size. And by allowing myself to maintain this 5% max loss on each trading size will allow me to seek out more opportunities and to realize the law of large numbers, right? Because the law of large numbers is a real thing in statistics and trading is statistics based. And if we can understand that keeping your trading size small, it'll allow you to reach that probability curve more often. Because what happens is, like, let's say, for example, if you're flipping a coin, yes, you may hit tails all 5 times, but the more you do it, let's say if you have 100 flips, eventually it's going to look more and more like 50-50, right? And so if you can identify a trading system that returns an 80% win rate, and a 20% loss. That means that you just need to find the opportunity where you could trade over a multiple transactions cycle, right? Where you can realize that 80% win rate. And the way you do that is by keeping your trade size small. And so I'm sticking to that 5% rule. And that leads me to this final thought. The idea and the focus of 2024 is really to automate my trading system. The quicker I can automate my decision making, the more freer I can live life and increase my capacity for more opportunities. And so this is an idea, concept that I think is very crucial as a trader. And this is something that I'm keeping for my inner circle. And if we can automate your trading system, the quicker you can make decisions whether to take profit or take your stop losses, so that way you can free up your capital for the next opportunity. The idea is to string across more than 80% wins, because if you can have a 80% win and a 20% stop loss, I think that you'll have the opportunity to be able to maintain profitability in 2024. And so that is what I have for you today. If you like this video, please leave a comment below. I think if we can have a good discussion in the comment section, I think it'll allow anyone who comes to this video to have insight on their trading journey. So without further ado, that's what I have for you. Uh, Welcome to 2024, and I hope that 2024 will be an incredible year for you all. Thank you again for watching, and we'll see you on the next one.